The stock market is long overdue for a correction. In fact, it's long overdue for a much deeper slide than just a correction. We'll watch as the ground gives way underneath us. A tectonic shift will occur, and the general public will be helpless to defend against it, swallowing everything in its path. You came here for the truth, so let me unveil that for you. Let's get into what HSBC issued a red alert, and they're warning that the stock market will crash. So we'll get into it today. This is referring to technical analysis. And as you know, I'm not the biggest proponent of technical analysis only. However, I like to see the charts, I like to see the indicators, and I like to track their progress. I do believe it's important. I can't just look at fundamentals or just look at technicals. I want everything. I want all the details. All right. So HSBC's technical analysis team has thrown up the ultimate warning signal. And this individual here sent a note out to clients issuing a red alert. This is an imminent sell-off in stocks given the price action over the last few weeks. That is huge. That is monstrous, in fact, to actually send a note to all your clients and saying there's going to be a crash. You don't do that if you weren't worried, if you weren't expecting it to happen. Now, this happens to be based on the Elliott wave principle. I'm sure a lot of people don't know what the Elliott wave principle is necessarily. Just to give you a quick introduction, we're looking at Robert Prechter. Robert Prechter is one of the proponents, probably the biggest proponent of the Elliott wave theory. And if you read his book, At the Crest of the Tidal Wave, you will find out all about it. It is absolutely incredible. The version I read was quite outdated. However, I do believe there's a revised version. So if you see that, definitely pick it up. Basically, it's a lot of technical analysis. And while I do believe it's important, a lot of people may not be interested in that so much. But if you want an excellent book, I highly recommend it. So going back to this article here, as you can see, we're talking about the Elliott wave principle and how they specifically use this to determine that there will be a crash. In late September, this individual, Gunn, said the stock market's moves looked eerily similar to just before the 1987 stock market crash. Of note, Citi's Tom Fitzpatrick also highlighted the market similarities to the 1987 crash just a few days ago. Then on September 30th, Gunn said stocks were on orange alert as they looked as if they had topped out. And then it continues on. It is from orange alert to red alert. And right here, it is looking very similar to exactly what happened in 1987, and of course followed a huge crash afterwards. This happens to be the Dow Jones, showing you what has happened in recent times. And what you can see from this, essentially what we're looking at is I'll read the paragraph in red here. The head and shoulders top with the neckline acting as resistance comes on top of a potentially bearish Elliott wave irregular flat pattern, and the fact that the index is now backing off of a high from 2015. A close, so for those technical analysis individuals out there, a close below 17,992 would be very bearish. Pressure would ease above 18,449. So think about this. If it goes below 18,000, we're going to have some trouble. And that would mean mounting pressures. That would mean an escalation of what has happened. So keep your eyes peeled on what happens with the Dow, and notice if it does sink below that 18,000. See if it closes at 18,000 or lower. That is very important. And you can see it the top there in the top right, where it's suggesting the head and shoulders. And this right here is, for a lot of people who don't know, essentially they have these different patterns, and they're able to predict stock market based on these typical patterns that generally occur, one of them being the head and shoulders. So I don't like to put too much emphasis on it, but at least in this case, they're saying that this is very apparent, very prominent, and I would suggest let's keep a close eye and look for the market to go below that 18,000 mark. Now, moving in quickly, HSBC also had an interesting statement to make. Bullish on gold. The US dollar price of gold is in an uptrend with, yet again, the Elliott wave structure. And they seem to be using this here, which is quite interesting because when it comes down to it, the Elliott wave and the long wave theories, all these different ones, seem to predict a long-term downtrend. And that's the way I've seen it. There are uptrends along the way, but in a long-term, you're looking at, let's say, a 75-year Kondratiev wave, or maybe the 200-year analysis, and you're trying to determine exactly what's going to happen tomorrow. It's very hard to do so. However, using that, we can sort of get a good gauge as to what's going to happen, and in sort of a longer term scenario. With momentum turning up, we open a long position at a spot reference of 1260 and goes on. And what I would say is that individuals need to realize what is important to them. Where do they have their money right now? Everyone's always looking for the best investment. I would ask you, where is your money currently being held? If it's in a bank, you have to get the money out of the banking system. It's so excessively dangerous that people just, they're really complacent to it all. I would just say that we need to be keeping a close eye right now because there seems to be a lot of volatility prior to the elections, of course. Gunn's analysis is formulated based on something called the Elliott principle, a form of technical analysis that believes investors move between periods of bullish and bearish thinking in a reasonably consistent pattern. And they've tracked these patterns before. It seems to be, I don't like to really give into these patterns too much. However, I would just say that if you read the book, it makes a strong case, and it also teaches you a lot about markets in general. Last but not least here, you're looking at the gold, and you can see where it breaks free from the trend. I'm not going to get into too much. All I'll say is that you have these resistance numbers at 1285, 1307. So if we do see it inching above 1300, it could be a breakaway price. So look for that in the near future. I won't get into any more of the technical analysis. This is all HSBC saying this, and they're basing that on the Elliott wave theory. It is a theory. It is technical analysis. We can't put everything we have into it. However, if we look at the fundamentals to back up these things, then we can sort of have a better gauge at exactly what's going on. And I do believe that we will experience a crash. Unless we see QE4, the market simply cannot handle it. And that goes for the other nations, not just the US, because these nations are now going to reduce their interest rates. Why? Because they haven't been printing or not printing enough, and they're simply not able to survive under these conditions. So we'll have to see where it all goes. I think either negative interest rates are a possibility, and at some point they're going to want to crash the system intentionally in order to consolidate power. They can simply use interest rates to do that, bring the interest rates up a couple percent, and you'll crash the whole system. Then you come in with all of your assets, purchasing all of these things for pennies on the dollar and making a fortune yet again. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. Head over to Amazon where they have a look inside feature. You can actually flip through the pages of the book to see if you like it. Take care.